So this is the official introduction of our course. And in this section, you're going to understand the basics, what is the Forex market, and a bit of history as to why the Forex market came into existence. So when we talk of Forex or the FX market, we are actually talking of the foreign exchange market. So it's a short form of the foreign exchange market. So the foreign exchange is the conversion of one currency into another. So supposedly you have your domestic currency and you want to sell your domestic currency and buy foreign currency. Uh, what you're actually doing there is you're participating in the Forex market because you're converting one currency to another. And vice versa, when you have foreign currencies and you want to sell the foreign currencies and purchase domestic currency, you are also doing the conversion of one currency to another. You're also a participant of the foreign exchange market. And the price at which the currency is converted, one currency is converted to another, is what we call the exchange rate. So the exchange rate is the price at which one currency is converted into another. So when you are in your respective nation, the currency that is used in that nation is what we call a domestic currency. So a domestic currency is used in a respective nation to do any domestic transaction. So any other currency coming in that is not a domestic currency is considered as a foreign currency. For example, if you are in the United States, the US dollar is actually the domestic currency, and any other currency coming in is what we call a foreign currency. So the Great British Pound, the Euro are all considered foreign currency. When you are in Britain, the Great British Pound is the domestic currency. When you are in Tanzania, Tanzanian shillings is the domestic currency. You are in Kenya, the Kenyan shilling is the domestic currency. So the foreign exchange market uh, refers to the trading of one currency for another, and it is far the most busiest and most active of the financial markets, with turnover comfortably exceeding that of bonds and the equities market. So the equities market is also called the stock market or the shares market. And the daily turnover for the bonds and the equities market is lesser, far lesser than the daily turnover for the foreign exchange market. And the foreign exchange market is actually the most busiest, the most active of the all financial markets, and it's actually the most liquid of them all. It's almost considered to be a perfect market because it has all the characteristics that are involved in the perfect market. There is a freedom of entry and exit, so you can enter the market and exit at any time. There is product homogeneity. Uh, there is profit maximization. Depending on the capital that you have, you can make as maximum profit as it can. And there is also freedom of information. So we have various sources of information that publicize or publish uh, all the necessary fundamentals that affect the foreign exchange market. So when you consider trading the foreign exchange market, you're actually considering trading what you call a perfect market.